all 34 banks passed the latest round of these so-called stress tests. Come on in, please. Congressman Jeb Hensarling, the chair of the House Financial Services Committee. Congressman, the results of these stress tests suggest, don't they, that Dodd-Frank worked, that the Democrats got it right with Dodd-Frank. I know you're laughing, but if they all pass the stress test, that's a pretty good sign, isn't it?
Well, it's encouraging that they passed the stress test, but it's a test that we really don't know much about. The failure of Dodd-Frank can be represented by the fact that we're still limping along at 1.5% to 2% GDP. The failure of Dodd-Frank is represented by the fact that we've codified bank bailouts into law. The failure of Dodd-Frank is in the fact that the big banks have gotten bigger and the small banks have gotten fewer. We're losing a community bank a day. And a bill that said they were going to help consumers, in many respects, consumers are worse off. Free checking has been cut in half. Bank fees have gone up. For many good, credit-worthy borrowers, mortgages are harder to come by. They cost more to close, and the litany goes on. So, of all the regulatory burdens that have been placed on our economy, Stuart, Dodd-Frank is the worst. In fact, you can combine all the other Obama regulations together, it wouldn't equal what Dodd-Frank has done to our economy, and that's why I'm proud that the House has passed the Financial Choice Act to replace it.
Yeah, I mean, look, in our own production team for this program, we have 3 people who've had real trouble getting a mortgage, just getting through the paperwork of getting the mortgage. And that was because of Dodd-Frank.
But yeah, it's thank you, Dodd-Frank. May I have another?
Absolutely. That's exactly how we're coming at it. But I have to say, these stress tests that they passed, it does suggest that the financial system is out of the mess that was in 2007, 2008. Our financial system's on pretty firm footing right now.
Well, I think it's certainly better, and it's certainly better because, Stuart, we have more capital. The question is, do we have enough capital? And so what we have done in the Financial Choice Act is given financial institutions a choice, thus the name. If for any bank, any financial institution that will post 10% equity capital to assets, you get a Dodd-Frank off-ramp so that we can basically replace regulatory micromanagement for market discipline, which I define as having both the appearance and reality of your own money at risk. And so I think that after the crisis, clearly we're going to have more capital come into the system. But we also have a Federal Reserve that is paying above market interest rates on excess reserves that in many respects may be taking capital out of the system that could be used to fuel the economy. So, you know, in some respects, maybe the economy is a bit more secure, but I still question, why is it that the big banks are bigger? Why is it that our corporate bond markets are seeing historic levels of volatility and illiquidity? We've got a long way to go.
Oh, we've got big bank chiefs saying too much capital. I want to, you know, lend it out there. I've got too much. I want to make it work. Jeb Hensarling, thanks for joining us this morning. Always a pleasure. And thanks for getting rid of some of that paperwork restriction. We just love that. Thank you very much.
You're welcome.
Yes, sir. All right. Blue 8.